Welcome to the FinGlam Finance channel. In this video, we will be reading and commenting on an article that we found very interesting. Feel free to leave a comment. Let's start reading the article. Bloomberg's top ETF analyst believes that BlackRock has an equal chance of securing approval for its Bitcoin ETF, while Grayscale appears to have a stronger chance of winning its case against the Securities and Exchange Commission. According to Eric Balchunas, a senior ETF analyst at Bloomberg, there's a 50% probability that investment management firm BlackRock will obtain approval for its spot Bitcoin Exchange Traded Fund, ETF. Balchunas' prediction is based on insights from Elliot Stein, a senior litigation analyst at Bloomberg Intelligence, who now estimates that Grayscale has a 70% chance of prevailing in its legal battle with the SEC. Balchunas suggests that the SEC might view BlackRock's ETF application more favorably, as it would allow them to save face by approving an ETF from a trusted traditional financial institution instead of Grayscale. Since Grayscale appealed the SEC's rejection of its application in June 2022, both parties have engaged in legal filings and presented oral testimonies. The case was heard by 3 federal appellate court judges on March 7. Stein stated, "We believe that Grayscale has a 70% chance of winning its lawsuit against the SEC regarding its attempt to convert the Grayscale Bitcoin Trust, GBTC, into a Bitcoin ETF." He further noted that Grayscale's odds improved from 40% after the completion of oral arguments, as all 3 judges on the panel seemed to lean towards Grayscale based on their lines of questioning. Bloomberg anticipates a resolution to the case by August. Bitcoin ETF applications have become a central focus in the industry, with Fidelity, Invesco, WisdomTree, and Valkyrie following BlackRock, a $10 trillion asset management firm, in seeking SEC approval. If applications from JP Morgan, Morgan Stanley, Goldman Sachs, BNY Mellon, and Bank of America are ultimately approved, the digital asset market would be exposed to firms with a combined $27 trillion in assets under management. While we await the decision on Grayscale's case, GBTC has experienced a surge of over 134% in 2023, reaching $19.47, its highest price since approximately May 13, 2022, as per Google Finance. Additionally, the discount of GBTC's share price compared to its overall net asset value dropped to 31% on June 26, the lowest level recorded since September 12 of last year, according to data from YCharts. A lower discount rate on the trust suggests that investor sentiment towards the product may be turning more positive. However, like much of the crypto market, GBTC is down over 65% from its all-time high price of $56.70. This was the text of the article, and now we will be commenting on it. The insights provided by Bloomberg's senior ETF analyst shed light on the prospects of BlackRock and Grayscale in the Bitcoin ETF landscape. With a 50% chance of approval, BlackRock stands as a major contender in the race to launch a spot Bitcoin ETF. Meanwhile, Grayscale's odds of winning its legal battle against the SEC are estimated at 70%, indicating a promising outlook for their bid to convert the Grayscale Bitcoin Trust into an ETF. The SEC's potential favorability towards BlackRock's ETF filing could be driven by a desire to save face by approving an ETF from a trusted traditional financial institution. This contrast between BlackRock and Grayscale underscores the growing importance of ETF applications in the industry. Fidelity, Invesco, WisdomTree, and Valkyrie are also vying for SEC approval, following BlackRock's lead. Should the applications from JP Morgan, Morgan Stanley, Goldman Sachs, BNY Mellon, and Bank of America get approved, the digital asset market would witness the entry of firms managing a staggering $27 trillion in assets. The ongoing legal battle between Grayscale and the SEC has seen back-and-forth filings and oral testimonies. Based on the lines of questioning during the proceedings, it appears that the 3 judges on the panel lean towards Grayscale's position. This development has increased Grayscale's odds from 40% to 70%. Bloomberg anticipates a resolution to the case by August, which will have significant implications for the future of the Bitcoin ETF landscape. The performance of the Grayscale Bitcoin Trust, GBTC, has been noteworthy, surging over 134% in 2023, reaching its highest price since May 13, 2022. Furthermore, the discount of GBTC's share price compared to its net asset value has dropped to its lowest level since September 12 of the previous year. This indicates a potential shift in investor sentiment towards a more positive outlook for the trust. However, it's important to note that GBTC, like much of the crypto market, has experienced a significant decline from its all-time high price. The developments in the Bitcoin ETF space are capturing the attention of investors and industry participants alike. The outcome of the legal battle, as well as the approval of various ETF applications, could shape the future of digital asset investments. With significant players like BlackRock and Grayscale in the spotlight, the landscape is poised for potential transformation. Exciting times lie ahead as the industry eagerly awaits the conclusion of these crucial decisions. Now we will read and comment on another interesting article. The top 8 financial institutions that have a strong interest in Bitcoin and other cryptocurrencies collectively manage an astonishing $27 trillion in assets. Prominent financial institutions in the United States are actively seeking to offer their clients exposure to Bitcoin and crypto, as they oversee $27 trillion worth of assets. Recently, on June 26, Meltem Demirors, Chief Strategy Officer at CoinShares, highlighted that at least 8 major financial institutions have expressed their intentions to delve into the digital assets market. These institutions include BlackRock, which has filed for a spot Bitcoin ETF, and Fidelity, which has developed crypto wealth management solutions. Other notable players in this space are JP Morgan, Morgan Stanley, Goldman Sachs, BNY Mellon, Invesco, and Bank of America. Demirors emphasized that many of the largest financial institutions in the U.S. are actively working towards providing access to Bitcoin and other digital assets. She added that the combined assets under their management amount to a staggering $27 trillion. The recent filing by BlackRock for a spot Bitcoin exchange-traded fund on June 16 has triggered a series of similar filings, reinforcing the notion that institutions are coming for Bitcoin. On June 24, the price of Bitcoin reached its highest point in 2023, reaching $31,185, indicating a surge in confidence, as reported by CoinGecko. Demirors also noted that while institutions are indeed entering the crypto space, it is still more of a gradual process rather than a sudden surge. She stated, "We are witnessing the construction of bridges in real time." It is worth mentioning that the estimated $27 trillion figure represents the total assets managed by the 8 institutions, and only a small fraction of this amount is expected to be allocated to crypto investments. However, Will Clementi, co-founder of Reflexivity Research, echoed Demirors' viewpoint, highlighting that the market capitalization of Bitcoin is currently less than $600 billion. He emphasized that once institutions such as HSBC, BlackRock, Fidelity, and Schwab have access to Bitcoin, it could potentially involve $25 trillion worth of managed assets. Institutional investors are already displaying increased interest in Bitcoin-related funds. The ProShares Bitcoin Strategy ETF, BITO, experienced its largest weekly inflow in a year, pushing its assets under management to over $1 billion, as reported by Cointelegraph. Relatedly, the prospect of BlackRock's Bitcoin ETF has sparked discussions on whether it will be a game-changer for Bitcoin or not. Earlier this week, Michelle Bowman, a member of the Federal Reserve Board of Governors, criticized the absence of a regulatory framework for cryptocurrencies. She argued that the lack of clarity surrounding this asset class leaves institutions in a state of uncertainty and a supervisory void. This was the text of the article, and now we will be commenting on it. It's incredible to see the level of interest and involvement that major financial institutions in the United States have in Bitcoin and cryptocurrencies. With a whopping $27 trillion in combined assets under management, it's clear that these institutions are actively seeking ways to provide their clients with exposure to the digital asset market. The fact that at least 8 major financial institutions, including BlackRock, Fidelity, JP Morgan, Morgan Stanley, Goldman Sachs, BNY Mellon, Invesco, and Bank of America are making moves in the digital asset space is significant. BlackRock's filing for a spot Bitcoin ETF and Fidelity's crypto wealth management solutions are just a couple of examples of their efforts. Although some may argue that this trend is just a trickle at the moment, it's undeniable that the bridges are being built in real time. The recent wave of filings for Bitcoin-related products following BlackRock's ETF application demonstrates the growing narrative that institutions are increasingly turning their attention towards Bitcoin. The surge in confidence is evident as Bitcoin reached a 2023 high of $31,185. However, it's important to note that the estimated $27 trillion in assets under management is a significant sum, and only a fraction of that is expected to be allocated to crypto investments. Nonetheless, the potential impact is massive. Reflexivity Research co-founder, Will Clementi, rightly points out that institutions like HSBC, BlackRock, Fidelity, and Schwab, with a combined $25 trillion in assets under management, will soon be enabled to invest in Bitcoin. This could bring about a significant shift in the market dynamics. We're already witnessing institutional investors showing increased interest in Bitcoin-related funds, as seen with the ProShares Bitcoin Strategy ETF, BITO, experiencing its largest weekly inflow in a year, pushing its assets under management over $1 billion. However, amidst this growing interest, there are concerns about the absence of a regulatory framework. Michelle Bowman's criticism of the lack of clarity and the supervisory void for cryptocurrencies raises important questions about the need for regulatory guidelines to ensure stability and security. Overall, the involvement of major financial institutions in Bitcoin and crypto signifies a major turning point. It will be fascinating to observe how this trend continues to unfold and how it shapes the future of digital assets in the financial industry. We are excited to share this information with you and create a community dedicated to financial growth. Let us know your thoughts in the comments as we continue to explore the vast world of finance together. Subscribe to our channel to stay informed and feel free to share and comment on all our videos. Thank you for your support. Attention! The information provided in this video does not constitute financial advice and is not intended to provide any form of financial guidance. The opinions expressed in this video are personal and may differ from those of financial experts. Any decision you make regarding investments will be your own decision. We do not intend to influence your decisions in any way. If you decide to undertake any investments, we recommend consulting professionals in the field. Before risking your financial capital, conduct your own research. Financial markets can be highly volatile, so if you choose to invest, do so with caution. It is important to be aware that financial transactions are often risky and can result in the loss of your entire invested capital. Never invest more than you can afford to lose. Past performance is not indicative of future results. Financial knowledge is essential. Be aware of your goals and abilities before investing. Conduct thorough research and verify sources before making financial decisions based on this video.